Well, 2 points on that, Jeff. First of all, the reason it's that low is obviously because of the economic shutdown that we've had, lockdown as a result of the COVID pandemic. So nobody's assuming that oil prices are going to remain at these levels indefinitely. But the second thing to say is that even at that price, 99 pence a litre, down from what, £1.30, £1.40 maybe 3 months ago, you can charge your car on electric. If you had an electric vehicle, you'd be able to charge it at 5 pence a kilowatt hour, and if you get the best rates available in the market, and you'd be able to travel 6 or 7 times as far on the tariff of the electric vehicle, even versus that 99 pence a litre. So I don't think people yet fully realised how cheap travel by electric vehicles is. Once you've bought it, what we need is for the price, the sticker price of EVs to come down so that they're cheap at the point of purchase. But that's going to happen in 2 or 3 years anyway.
But Mark, I mean, I was going to trump Jeff with my 16p a litre for my heating oil that I finally filled up my tank with, which is the lowest historic level I have ever seen as well. So I have a brimming tank in Sussex now, more like a fuel depot. But as you say the prices are coming down on these cars. Mark, they're not coming down on these cars. And actually, the environmental cost of an electric vehicle from manufacture to scrappage is still incredibly high. We still have to put in the entire cost of the production of this vehicle. I think as much as I would love to see a greener world, these cars are not green just yet. And the idea of scrapping a perfectly good car like Jeff's little hatchback that he comes into London with, which has a very low emission rate as well, to buy a brand new vehicle which has to be manufactured, that has to be factored in, doesn't it?
Well, look, I'm not saying that people are going to rush out and scrap their existing models and trade it in for an EV today. Why would you do that? Nobody does that. But what I'm saying is the economics now are so powerful that when it comes to buying your next car, and probably by then oil prices have gone back up again, the trade-off is going to be a much more straightforward one. And governments around the world are putting in place more and more incentives for this. And to your point, Steve, about the environmental friendliness of EVs, of course there is more work to be done on the full cycle, and in particular on end of cycle use of batteries, but there's plenty of academic research suggesting that and industrial anecdotes that you can do a lot more on the recycling front with end of cycle batteries. So I'm not so concerned about that. The number one issue coming into this pandemic, which for obvious reasons has put everything else to one side for the time being, was the climate emergency that we're living in. That hasn't gone away, and it will still be there when we come out of this pandemic. And electric vehicles are a very big part of the solution. We have to decarbonize transport.
Mark, I beg your pardon. I totally understand what you're saying. The governments around the world are getting themselves to levels of indebtedness we haven't seen apart from at the end of Napoleonic Wars, the First World War and the Second World War as well. Catastrophically high potential debt levels. I know what you're going to say as the answer, that the answer is investing in infrastructure, in new technologies and climate change as well. But the money might just not be available, Mark.
Well, look, I mean, I think this is the time for governments really to think intelligently about the future. The thing about infrastructure investments is that there's a dividend and payoff in the future. I mean, if you're just paying if you're taking on debt for current expenditure, and obviously everybody understands that governments around the world have to keep the economy moving, so nobody's suggesting they shouldn't be doing that. But with interest rates where they are, it does make sense for governments to borrow at these negative rates in many cases and put it into infrastructure that's going to have a payoff, not just this year, next year, the year after, but 10, 20, 30, 50 years down the line. That's the obvious thing to do. The other point I would make is, since the last time I was on the show back in August and we were having this debate and oil prices were at $60 a barrel, what we've seen is the increasing pressure on the oil industry. And in a way, the COVID pandemic, as Jeff said in his intro, has really been, it's a trailer really of the much bigger shock coming for the oil industry in the form of these structural pressures around climate change, decarbonisation, improving competitiveness of renewables, and so on. And I remember last time I was on, we had this discussion about, well, at least you get your dividends when you invest in the oil companies, but you can't even make that argument anymore with the dividend cuts that we've seen from the European majors. So I think we really have to recognize that this crisis, the pandemic-induced crisis, is only a trailer of the much bigger crisis to come if we do not invest sensibly for the long term.